The fact that gold prices are now commanding more than 55,000 rupees per 10 grams definitely gives Indian households a reason to rejoice, because almost every Indian household out there, from the poorest to the richest, does have gold in some form or the other. You may have received it as a gift, it may be lying in your home lockers or in your bank lockers. But the question is, this kind of gold, the jewelry, the coins, they do carry a whole host of sentimental values as well. I'm pretty sure none of you all are actually tempted to go over to your bank locker and sort of sell off all of your jewelry, your wife's jewelry, or your sister's jewelry just because gold is at 55,000. And that's the reason why it's essentially important to separate investable gold from consumable gold. Consumable gold, of course, does come in the form of your jewelry, your coins, etc. But investable gold is essentially paper gold or e-gold. And because it's paper gold, you don't need to worry about purity. You don't need to worry about safety either. So here are some ways in which you can actually invest in gold and take advantage and encash on this massive rally that we are witnessing. The simplest way of investing in gold definitely has got to be a gold ETF. It's exactly like a mutual fund, but of course it does not invest in any other security apart from gold. The fact that gold prices have as well rallied the way they have, gold ETFs too have been the best performing mutual fund categories among all, so far this year. If you look at it in the last 1 year as well. And all of your major mutual fund houses, Axis, HDFC, SBI, they're all offering a gold ETF. And because it's an ETF, you can actually exit whenever you want. The second option, and this one definitely is a favorite among many personal finance experts, is the sovereign gold bond scheme. It is sovereign, so essentially there's no credit risk. It's backed by the government of India, issued on behalf of the government of India by the RBI. And the most unique part about this bond, or rather this instrument, is that this is the one method of gold that actually gives you a regular rate of interest. As we know, gold lying in your locker as is not going to generate any frequent income for you. But SGBs, as they're commonly known, do give you a 2.5% interest on the face value of the bond that you have purchased. Exit may not be that easy because there is at least a 5-year lock-in, but the maturity is actually 8 years later. But at least you're getting this 2.5% interest, which ordinarily a gold investment would not generate. Another way of sort of investing in gold, well, not exactly a method of investing directly in gold, but you do get exposure in gold through a multi-asset fund. As the name suggests, it is a mutual fund, but it invests in at least 3 asset classes. So you have equity, you have debt, and you have gold as well. But in all probability, the investment in gold is going to be very little. The minimum is 10% as per SEBI norms. So many funds may hold only 10% or maybe more than 10%, obviously, but it's quite low. So this may not be the best way to get exposure to gold because, you have the equity and the debt component as well, but it is a way. And finally, the gold monetization scheme. For all of you who may be thinking that, look, gold prices are really high, so, I'm not sure if I want to invest. What you can do is take some of the idle gold lying in your home locker or your bank locker. It may be jewelry, coins, bricks, whatever it is. And you can actually go over to a designated bank and deposit with them. This is a scheme, put forward by the government of India to mobilize the idle gold lying in households. In turn, what you get is a little bit of interest, but mind you, the interest is extremely small. Also, it's important to note that if you take a longer period for this scheme, the bank will not give you your gold back, but it will instead give you the value of your gold at the time of the scheme sort of ending or the period of the scheme ending. That's important to note. But of course, if you take a shorter time period for the scheme, then you will get your gold back. So a plethora of options for you to choose from. And yes, like I said, always remember that it's this e-gold, paper gold, or the investable gold that actually forms a part of your overall portfolio, not the jewelry or the coins that you have received on the event of different occasions, or something maybe that you may be consuming, or the female members in your family may be consuming.